Imagine this. You're 25, just starting your career and eager to make a mark. You want to build wealth, but everywhere you look, it feels like people are talking about thousands of dollars you don't have. So here's the big question. What if I told you that you could start investing with just $500 or even less? Yes, $500. You don't need a trust fund or a six-figure salary to get started on this journey. In this video, we're diving into the world of investing for beginners, and trust me, it's way less intimidating than you think. We'll break down simple strategies, explore different options, and show you how that small step today could shape the financial freedom of your tomorrow. Let's talk about how that small step today could shape the financial freedom of your tomorrow. All right, let's dive in. First up, stocks. Stocks are one of the most common ways people invest their money. Now, stocks aren't just for Wall Street hotshots, they're for you and me. Everyday people can and do invest in stocks. Imagine buying a single share of a company you believe in, something you know, maybe even love. It's like owning a small piece of something bigger. Could be Apple, Tesla, or even that cool new coffee shop down the street. The possibilities are endless. When you buy a stock, you're essentially buying a tiny piece of ownership in that company. You become a shareholder. And as the company grows and becomes more profitable, the value of your stock can increase too. This means your investment can grow over time. It's like planting a seed and watching it grow into a tree. Except this tree could potentially bear financial fruit. The more it grows, the more you benefit. But here's the twist. Instead of thinking about the big wins, think long-term. Patience is key in the world of investing. Don't expect to get rich quick. Quick money schemes are often too good to be true. Investing is a marathon, not a sprint. Slow and steady wins the race. The real magic happens when you hold on to those stocks for years, letting them ride out the ups and downs of the market. The market will have its highs and lows, but over time, it tends to grow. Think about it this way. Would you invest $20 today if it could be worth $200 in a few years? That's the power of long-term investing. If yes, then stocks could be for you. It's all about making informed decisions and being patient. It's about having patience, believing in the companies you invest in, and letting the power of compounding work its magic. Compounding can significantly increase your returns over time. Now, I know what you're thinking, but Graham, isn't the stock market risky? It's a valid concern. And yet there's always some risk involved. No investment is without risk. But here's the thing. By investing in companies you understand and believe in, and by holding on to your investments for the long haul, you can actually minimize that risk. Knowledge and patience are your best tools. Remember, diversification is key, and we'll talk more about that later. Spreading your investments can help manage risk, but for now, just know that stocks can be a powerful tool for building wealth, even if you're starting with just a small amount of money. Every little bit counts and can grow over time. Next up, ETFs or exchange-traded funds. Now, if stocks are like buying individual slices of pie, ETFs are like getting a whole sampler platter. They let you own a tiny piece of hundreds or even thousands of companies all in one go. Imagine this, with just $500, you could be investing in tech giants like Apple and Google, healthcare companies developing life-saving drugs, and even renewable energy companies shaping a sustainable future, all with a single investment. ETFs are like the ultimate diversification tool. They spread your risk across a wide range of companies and industries, so you're not putting all your eggs in one basket. Remember that saying, don't put all your eggs in one basket? Well, ETFs are like having a whole bunch of baskets. And the best part? You don't need to keep checking your portfolio every day. ETFs are designed to be low-maintenance investments. You can set it and forget it, knowing that your money is working hard for you in the background. Are you feeling a bit of relief yet? ETFs are perfect if you want growth, but with a bit less drama. They're like the chill friend who's always down for a good time, but never starts any drama. But here's the thing. Not all ETFs are created equal. Just like with stocks, it's important to do your research and choose ETFs that align with your investment goals and risk tolerance. Look for ETFs with low expense ratios, the fees they charge, and a solid track record of performance. And remember, diversification is key. Don't just invest in one ETF, spread your money across a few different ones to further reduce your risk. This way, you can balance out the highs and lows of the market. Stay informed about the sectors your ETFs cover and adjust your portfolio as needed. Remember, investing is a long-term game. Patience and consistency are your best friends. With ETFs, you can enjoy the benefits of a diversified portfolio without the stress of constant management. So take a deep breath, invest wisely, and watch your portfolio grow over time. With the right ETFs, you can feel confident about your financial future. Explore the diverse range of ETFs available and make informed choices to build a robust investment strategy. Happy investing. If you're the kind of person who wants investing to be as simple as possible, robo-advisors are for you. These digital platforms are designed to take the complexity out of investing, making it accessible and straightforward for everyone. They're like personal finance assistants that build and manage your portfolio based on your goals and risk level. Whether you're saving for retirement, a house, or just looking to grow your wealth, they tailor everything to fit your needs. You set it, and they handle the rest. No more stressing over which stocks to pick or when to rebalance your portfolio. Imagine this. You sign up for a robo-advisor, answer a few questions about your financial goals and risk tolerance, and boom! You're on your way to a well-managed investment portfolio without lifting a finger. The robo-advisor takes care of the rest. It continuously monitors and adjusts your investments to keep you on track. It builds you a diversified portfolio of investments, spreading your money across various asset classes to minimize risk. Automatically rebalances it over time, ensuring that your investment mix stays aligned with your goals, and even reinvests your dividends for you. This means your money is always working hard, growing and compounding over time. It's like having a personal financial advisor on speed dial, ready to assist you whenever you need guidance. Except you don't have to pay them thousands of dollars a year. The cost savings are significant, making professional financial management affordable. Robo-advisors typically charge a small percentage of your assets under management, often around 0.25% to 0.50% annually, which is usually much lower than the fees charged by traditional financial advisors. And the best part? These fees are transparent, so you always know what you're paying. Robo-advisors are accessible to everyone, regardless of your financial background or experience level, even if you're starting with just a few $100s. They've completely democratized investing, opening doors for people who might have felt excluded before, making it easier than ever for anyone to grow their wealth. With consistent contributions and time, your investments can flourish. Now I know what you're thinking. But Graham, aren't robo-advisors just fancy algorithms? How can I trust a machine with my hard-earned money? And yeah, they do use algorithms to manage your investments. These algorithms are sophisticated and data-driven, designed to optimize your returns. But these algorithms are designed by experienced financial professionals who understand market dynamics and investment strategies, and are constantly being refined and improved. This means your investments are managed using the latest financial insights and technology. Plus, many robo-advisors offer access to human financial advisors if you have questions or need personalized advice. This hybrid approach ensures you get the best support. If you have questions or need personalized advice, you can reach out anytime for that human touch. So you get the best of both worlds, the efficiency and precision of technology, the convenience and affordability of technology, which makes managing your investments a breeze, with the peace of mind of knowing that there's a human there to help if you need it. This combination ensures you are never alone in your financial journey. Peer-to-peer lending is a unique way to invest that often flies under the radar. It's like being the bank, but instead of lending money to big corporations, you're lending it to everyday people and small businesses. Here's how it works. You sign up for a peer-to-peer lending platform and browse through loan requests from borrowers. You can see their credit scores, loan terms, and interest rates. If you find a loan you like, you can invest as little as $25. Now, keep in mind, peer-to-peer lending does involve some risk. Borrowers can default on their loans, just like with any other type of lending. But here's the thing, peer-to-peer lending platforms typically have safeguards in place to mitigate that risk, such as diversifying your investments across multiple borrowers, and the returns can be pretty sweet. Because you're cutting out the middleman, the bank, you can earn higher interest rates than you would with traditional savings accounts or CDs. It's like being your own little financial mogul, just with a smaller budget. But here's the key. Don't put all your eggs in one basket, or borrower in this case. Spread your investments across multiple loans to reduce your risk. And always do your research on the peer-to-peer lending platform and the borrowers before you invest. Here's the secret sauce of investing diversification. Instead of putting all $500 in one place, spread it out. Remember that sampler platter analogy we talked about earlier? That's diversification in action. You could put a bit into stocks, a little into ETFs, maybe a few dollars with a robo-advisor, and even dip your toes into peer-to-peer lending. By diversifying, you're essentially creating a safety net for your investments. Think about it like this. If you put all your money into a single stock and that stock plummets, you're in trouble. But if you spread your money across multiple stocks, ETFs, and other asset classes, the impact of any one investment on your overall portfolio is minimized. Diversification is all about not putting all your eggs in one basket. It's about spreading your risk and giving yourself the best chance of success over the long term. And the beautiful thing is, you don't need a ton of money to diversify. Even with just $500, you can create a surprisingly diversified portfolio. Now, I know what you're thinking. Graham, this is a lot to keep track of. And yeah, managing a diversified portfolio can seem daunting at first. But here's the thing, you don't have to do it alone. There are tons of resources available to help you, from robo-advisors that do the heavy lifting for you to financial education websites and books. And remember, you don't have to be a financial expert to diversify. Just start small, do your research, and gradually build up your portfolio over time. All right, we've covered a lot. Stocks, ETFs, robo-advisors, peer-to-peer lending, and the power of diversification. Starting with $500 may not seem huge, but remember, investing is a marathon, not a sprint. This small step could be the foundation for bigger financial wins in the future. Remember, the most important thing is to just get started. Don't let fear or intimidation hold you back. The sooner you start investing, the sooner you can start harnessing the power of compounding and building wealth for your future. Now, if you're ready to start but want to make the most of every dollar you save, check out our next video. Budgeting for beginners, save more, spend less. It's the perfect companion to help you grow your wealth even faster. Thanks for watching, and remember, the journey to financial freedom begins today.